All right, guys, this is part 4 of our first time homebuyer class. This is understanding your financial readiness. This would typically be the section we would refer you to one of our trusted mortgage people. Obviously, we're real estate professionals, they're mortgage professionals for a reason. We know just enough to be dangerous, so we'll kind of keep this short and sweet, but yeah, this is where we would send you to one of those. The first thing that you want to do to understand your financial readiness is determine your budget. How much can you spend on housing? We gave you some benefits in that earlier section of renting versus owning, and there's some if you didn't watch it, go back and watch that one because that'll help. But sometimes with owning a home, that monthly budget can fluctuate a little bit if you got a toilet going out, any of those kind of things. So just understanding what you can afford, a mortgage lender will help you with that upfront. Calculating your upfront and ongoing costs, right? How much is your home maintenance going to be? Are your taxes and insurance going to fluctuate just a little bit? Down payment requirements. Most loans, there's some USDA loans or some other loans out there, rural loans that don't require a down payment. There's some that require a bunch. Sometimes when you put more money down, you get a better rate or a better loan product. Understanding the different types of loans and what it'll cost you down payment wise, very important.
Yeah, I think it's very important to reiterate that this is obviously not our job in the process. We are real estate professionals, not mortgage and lending professionals. But like Eddie said, we do know quite a bit because we have bought quite a few homes ourselves. So I want to backtrack just a little bit, Eddie, and talk about determining your budget and affordability. And I think I hit this in another video as well. But when you go to your pre-approval appointment with a lender, they're going to tell you the amount at which you can afford. So they're going to give you that top number. So they're going to say, hey, $450,000 is your number. You want to stay at that or under. You might go to that appointment and start looking at $450,000 houses and look at your payment and decide, oh my gosh, I don't want to afford $450,000 worth of house. So very important to ask, what is my payment going to be every month? Because that's how you can budget the best. Don't go out looking, because you might be approved for $450 and really you want to afford $250. So make sure you're paying attention to that. When it comes to those ongoing costs, make sure you know what your utility bill average is. You can call the local municipalities yourself and ask those questions, or a good listing agent is going to put those in the listing. You're going to have what those average bills are. Ask your agent. They can find that out for you 100% of the time. And then down payment requirements, yes, you can get anywhere from 0% to 99, putting 99% down. 0% USDA rural loans, all the way up to a conventional. There are some lenders out there that do have a 1% down conventional product. So again, we're not pros on that as far as which one of those you need to go with. Once you break down your finances to your lending professional, they can at that point cover that with you.
So instead of maybe covering loan programs, let's talk about just getting your pre-approval, the process of getting your pre-approval. What typically a lender is going to ask for is income statements, income to debt ratios. They're going to calculate that out for you. They're going to probably do a soft pull on your credit to see what your credit score is. So they're going to look at how much income you make, how much debt you have, and what your credit score is. And they're going to give you kind of a formula for you can afford up to this. Like Ian said, this is maybe not what you should be shooting for. You need to be shooting for what fits your monthly budget, but that's what a lender is going to do. Now, what we suggest I suggest when we're talking about different lenders is call 2 or 3. All lenders have different programs for you. Some of them have different rates at different times. They can kind of fit you in different buckets to customize the loan to fit a high credit score, low down payment, or high credit score, high down payment. All of them just have a little bit different process, and it's good to rate shop, right? Some lenders can just offer different things when you ask, and you never know until you ask.
Yeah, lots of different products out there on the market when it comes to a mortgage. So definitely do your research and your due diligence there. We're obviously always happy to help you and hold your hand throughout that process. A few kickbacks I get, Eddie, I don't know if you get this too, when I deal with my buyers or sellers, is they're like, hey, I just really don't want you involved super deep into my finances. We as the realtors, we sell homes. I don't need to know what you make a month. I don't need to know any of that. That's between you and the lender. They obviously have to know that because they're about to lend you a large sum of money. But when you go into that meeting, Eddie talked about pulling credit. A lot of people are scared about the credit pull. You get 3 soft credit pulls before it affects your credit. And I was told that today. So 3 soft credit pulls before that affects your credit. So let them pull that credit. If you know what your credit is, you can tell them, but they're basing those numbers they're giving you off of the numbers you're telling them. So let them do that soft pull on your credit, especially if you know you're somewhere close to being able to do it. One thing I want to always mention, and I always tell this to people when I'm looking or we're going to look for houses, is they say, hey, I'm thinking about buying a house a year from now, 2 years from now. You need to have the conversation. If it's anywhere in your horizon to buy a home, you need to have that conversation with a lender today. I can't tell you how important it is, because the last thing you want to do is get to a point where you call me and you're like, hey, Ian, I'm ready to buy. I'm like, awesome. Have we been pre-approved? No. Call X, let's talk this through. Call Y, let's talk this through. Call Z, let's talk this through. Talk to your lenders, like Eddie said. Feel free to shop those. Call these people, because the last thing you want to do is get to a point in your life where you think or need to be moving and you really don't have the credit score to do it. Get the education now. It costs you nothing to talk to a lender and build just wealths of knowledge based off their wealths of knowledge. So call them today, get that set up, because if you have problems with your credit, they have stuff to help you build your credit. I know the last time I bought a home, they told me 2 tricks to do, and it boosted my credit score 30 some odd points. And it was nothing. And I was like, that doesn't even make sense to me, but cool, let's do it. But they have all those tips and tricks because, once again, they're professionals. They do this every day. They see it every day. So whatever your situation is, whatever you think it's going to be, talk to a lender today. Get that figured out. That way you know, hey, based off where my credit score is, I really need to save an extra $10,000. Now you have an action step. You know you can go do that. Hey, I have enough money. My credit is just in the low 6s, upper 5s. Can I do anything with that? Go ask the question today, because some of that stuff can take 6 months to a year to build. You might as well be working on it now while you have time on your hands. The last thing you want to do is get to where you think you need to do it, and now all of a sudden you can't. You're another year out.
And the key is it costs you nothing. Most pre-approvals last for 90 days, and then it costs you nothing to extend it. All they got to do is verify your income. So great point. Costs you nothing. That's the most important thing. So that concludes section 4, the one that we were the least prepared for. So I appreciate you guys staying there. Next, we will have section 5, which will be the fun part, touring homes.